Hey guys, Dave with Moniology here. Hope everyone is having a great day. Today's August 22nd, 2021, and this is the weekend market review, premium preview. We're going to go through roughly 30 charts from a daily perspective this time around and try to give us a better sense of where we've been, where we are, and where we might be headed. So let's dive right in. Starting with copper. So copper here is at a very interesting juncture. So for those of you new to our videos, we do things a little bit differently than many market technicians. So we look at the markets from a price and momentum comparative standpoint. So we want to see how momentum is doing relative to price at different price points. Is there positive divergence? Is there negative divergence? And I'm of the belief that momentum is more important than price. It's more telling. And while price ultimately is what you take to the bank, momentum is going to tell you the direction, the probable direction of the next move. So when it comes to copper, you see we hit an inflection point. In terms of the most important RSI levels, they reflect Fibonacci points as well. So first you have the standard 70, 50, 30. But in terms of the Fibonacci, you've got the 30.9, you've got the 38.2, you've got the 50, you've got the 61.8 and the 69.1. And those levels are critical. And what you see here is a reversal at support. So we back tested this level of support at the 30.9 level, and now we've rallied. Now, I'm not saying that a bottom is in, but it's very probable that it may be. And so it's important to keep an eye on this. And again, no one chart in isolation tells you what's happening. But if you look at a number of different charts in aggregate, you can formulate a picture. And so to me, this pink line or purple line is the 200-day moving average, and we rallied off of that moving average. And let's see if this level holds. My hunch is that it will, because it's a back test on price. It's a back test of momentum. And sure, we can retest it again. We can create a double bottom. Technically, even we can create another lower low in price, so long as we're still above this trend line and still above this trend line. So we'll see how it goes. When you see this stochastic starting to break out, it's a good sign. When you see RSI starting to bottom, that's a good sign, as well as the price itself breaking out of several back test zones. So to me, this $4 level is a critical place to hold for copper and general equity bulls, because I think copper is a good barometer on the general state of the economy. Gold. So gold, very interestingly, a lot of different perspectives are I'm reading throughout my financial Twitter feed. The primary of which is that gold has likely not bottomed, because or might need to see another flush out low. Why? Because the miners aren't buying this most recent advance in gold. And that may be true. Certainly, you want to see the miners leading the price of the metal. With that said, there are different periods of time where the metal can outperform the miners, and it could be due to a number of factors. So it's not enough to say that just because the miners are underperforming the metal, therefore the metal has to drop. Because when I look at the metal right now, we are consolidating below the confluence of moving averages. The blue line is the 20-day, the red line is the 50, green line is 100-day, and the pink line is the 200-day. So there's a lot of resistance around, let's say roughly 1800, right? We're also consolidating below the 50 RSI level here. However, we are above this downtrend, and we are in a bullish flag consolidation here. And so yes, we did break this low here, but we rallied very quickly thereafter. And I'm looking at this $1,800 range as a line of descent. Can we pull back to 1750? Sure. That's a possibility given how the miners have performed. But do I expect a breakout very, very soon? I do. And I'll show you why when we look at the miners. But I think we're very close to a bottom in gold and silver. Gold bugs. So here's one perspective on the actual equities. So again, you are in a constructive channel here, right? That seems to be finding support and resistance along this channel, and we're at the bottom end of this channel. we are also, even though price did break down below a pretty significant level of support here, that let's say roughly 250 is significant. That level is kind of was a line in the sand, and so. But notice what happened. RSI did not make a new low. We made a new low here. We did not make a new low here. Now, while it's still possible that we break below that critical 30.9 level and perhaps wash out some more bulls and perhaps even kind of fill this gap here around 2020, yeah, it's a possibility, and kind of a fake out low. But with that being said, the fact that RSI is creating a higher high here and creating positive divergence is a very, very good sign. Can't say when the bottom is going to be. Has it already been in? Is this the bottom? Are we going to see another lower flush? I can't say, right? And anyone who says they can is lying to you, or lying to themselves most likely. But what I can say is that it's very, 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 very close, and that's the key. When you gotta, if you already own these miners, then hold on, because I think you're very close to the bottom. If you'd like to get in, it's impossible to time it perfectly. So tranche into it. If it does give you a lower price, fantastic. If it doesn't and it rallies higher, well, buy into strength. That's always a good opportunity. But this is a great area to be buying. Stochastics are very, very oversold. And at the very least, I expect a rally, if nothing else, than to retest this upper boundary here around 267 on the HUI. Here are the gold juniors, GDXJ, more familiar ETF here. Again, we are at critical support. This is a line in the sand for me, 38. So can it be tested? Sure. Can it even be breached on a day-to-day basis? Yeah, market makers will tend to do that too. But notice we have 1, 2, 3, 4 lower lows in price. Momentum has not confirmed any of these, and we're holding that 30 level right now. So I expect a rally. Again, I don't know if it happens. Well, I'll say this, the probability is high that it does happen this week. And based on the charts that we're going to go through, and we've already started going through, I think that there's not going to be tapering. There's going to be a more dovish tapering conversation when the Jackson Hole meeting happens with the Fed, I believe, on Friday. And that's going to create a spike in equities, commodities, and so on. That's just my view. Again, it's the minority view right now. But when I see the levels of support here, I just don't see a breakdown happening. I see a rally taking place in a lot of these commodity names. And hopefully I'll build that thesis as we continue going through these charts. Gold majors, same sort of story. Back testing right now, price. This 30 level is a line in the sand. If it breaches this level, I do expect a major breakdown potentially towards this 27 area. But I don't think it's going to happen, but it's possible. Right now, we've got, again, higher highs and higher lows. We're not making new lows in momentum, even as price does continue to trickle down a little bit. But testing this lower boundary here, and there's a lot of support. MACDs are not making new lows. That's a good sign. And again, stochastics are very oversold. So I expect a relief rally. Do we get just to 33 and then get pushed lower, or do we break out? We'll find out. I don't know the future any more than anybody else does. Here's crude oil. So crude oil has really taken it on the chin, and this, we can make up different reasons for it, but I think largely it's due to this Delta virus and variant rather. And bottom line is we are back testing this trend line here. Also we're right now exactly at 200-day moving average support around 61.50. So if we break below that, I can see a flush out all the way down to 55. I will say that crude oil is not creating a higher low right now, and it is creating some positive divergence. Momentum is not substantially lower, even though the price has dipped quite a bit. But with that said, do I expect a rally? Sure, I could see a rally back to these 38 RSI levels, but am I convinced that the lows are in crude? I can't say that for sure based on this chart. On its own, it's not as constructive as some of the other commodities. All right, marijuana, which trades very much like a commodity. Longer term, this is a very, very bullish chart. You've got this beautiful rounded bottom. We're at the neckline support here around 850. And if this level holds, this is going to be an incredible support level that if this this descending wedge pattern, which typically breaks to the upside. If this breaks out about above $9, there can be a major rally in marijuana stocks. We're back testing this level, and that's a very, very positive sign that we're not making new lows on momentum. So keep an eye on marijuana, and let's see if they want to give you a nice high. Palladium. All right, so palladium did break down. I've been talking about in the videos that we're creating lower highs and lower lows. Momentum is not doing much different. And sure enough, once we couldn't break this 50, down we went. So the next support level is this 2200 area. We're pretty close to it. That's a good sign for palladium bulls. But it's on its own. This is the buy zone here. So I expect to see some buying, but I'm not bullish on palladium anymore until it breaks back above the 2500 area, right around this 200-day moving average, which is now downward sloping. Platinum, on the other hand, platinum is very interesting, right? A lot of times you trade platinum and palladium in pairs. You short one, buy the other. And clearly platinum was the short for a while as palladium rose, and platinum was shorted. Well, you've got this rounded bottom here, and you've got this we've got this bullish flag. Now we're testing. We created 3 lower lows in price. Momentum has not, right? 3 higher highs in momentum, and now we back tested this level. So platinum is a buy above 1020, 1030 here. But there is also that 1100 area that you need to breach because you've got a lot of downward sloping moving averages. But I think above 1020, this is going to trigger a bull run. And generally speaking, you want to see platinum outperforming gold in a bull run, and it hasn't done so in a while. I think the tide may change very, very soon. Platinum was up 2.4% on Friday, and it's a good sign, but I want to see follow through on Monday. If it doesn't happen, then perhaps platinum breaches 950 and heads lower, and that would not be a good sign for precious metals. Silver. So silver is coiled as you can be, creating a nice positive divergence here. I think silver is going to make a big move in the next couple days. Right now, a lot of folks are suggesting a lower low potential on silver, possibly towards that 21 to 22 area. It's a possibility considering how poorly silver stocks have done. But on the other hand, if this breaks out of this descending wedge, I think you're going to see, and I'd like to see it above 24, you're going to see a major move in silver, because I think silver, I don't have much evidence for this, but I think silver is being shorted right now, and I think it's going to get squeezed. But who knows? It could go lower. Let's see what the silver juniors are suggesting. So silver juniors are right now slightly below the line in the sand, that 1250 area, but we're not creating a lower low in momentum. That's a extremely positive sign. So can we dip lower if there's that flush down lower towards 11? Sure, we can do that. This is a huge buy zone right here between 1050 and 1250. I'm a buyer. I suggest you guys consider doing the same. But for a breakout, this needs to break this upper trend line around 13 right now. So it's got a lot of work to do, but I think silver juniors are a huge bargain at these prices. Silver majors also at support and at this line in the sand area around 38. So we're right below it. We're sitting on this lower trend line of support. But again, notice 1, 2, 3, 4 lower lows in price. Momentum has not created lower lows at all. And so whenever this tide does turn, I think silver is going to run really, really hard to the upside. All right, our favorite commodity, uranium, as many of y'all know, we back tested this line in the sand, 17 on the URA perfectly. Now we are still below the 200-day moving average, but we created a lower low in price with a higher low in momentum, right? Momentum did not confirm the new low, positive divergence. MACDs are creating positive divergence, and with stochastics extremely oversold, I expect to see a major run in uranium soon. We're starting to see it with the Sprott ETF moving prices higher. Is that going to be the trigger that accelerates this move? I think so. Of course, it's got a lot of work to do. It's been quite a sell-off from the highs of 24 to the lows of 17. It's not such a big sell-off in terms of percentages on the URA, but when you look at the majority of the mining stocks in the uranium sector, they're down from anywhere between 30 and 50% from their highs. In a bull market, you don't see declines much higher than that. So it's been painful if you're heavily invested in the sector as I am. But I think the gains from uranium right now are probably better. The potential gains in the uranium sector are probably better than any other sector that I've been covering the market. And this is going back 20, 25 years. So yeah, above 17, this is a very strong buy. If it does dip below, this would be a major buy zone, just on a fundamentals level from 15 to 17. I just think the probability of it going there is not high. But again, if the general markets can have a correction, pretty major correction, then this is a level where I do expect the URA to go into. But I just don't see it right now. Here's the uranium trust that I was referencing by Sprott. They just acquired basically a pretty stagnant uranium trust, and they are really looking to corner this market. And they are the biggest commodity players in the world, and so this is the level that I've been watching for a long time. This $12 area on this particular ET or tracker, if you will, I don't know if it's called an ETF at this point, is really key. If it breaks this 1175 zone, you've got a weekly breakout and you're going to see a major move in uranium prices. But it's been held back. Every time it's hit this level, it's fallen back, right? So right now we had a major move on Friday, which is very, very positive. RSI has broken out, extremely positive, and this is all coming on this back test of this trend line. So we are now in a bullish uptrend. Look at the volume. That's really huge. MACDs have broken out and stochastics have broken out. So right now you've got a really positive momentum move in the underlying price of uranium. Let's see if the commodities, the actual equities, pick up on this and start running this week. I'm watching Australia overnight to see if there's going to be a continuation of the bottoming in the uranium names. And of course, we'll cover those most likely Monday or Tuesday evening, depending on time constraints for the premium members. Biotech is an area that we haven't really covered as much of late, but it's an area of interest of mine. This ETF has been absolutely hammered from the highs of 174 all the way down to 115. But again, we're not making new lows here. That's a very positive sign. We're back testing this 38 level so far successfully. I think biotech is about to turn. We want to see confirmation above 127, but if this breaks out, markets are just not going to sell off. Now, of course, it hasn't broken out yet, so there's a lot of work yet to be done. But it's a good sign when the MACDs are not making new lows, and already it's oversold. And again, all you need is a trigger long, and you're going to see a very strong move in the biotech space. China. All right, so we've been covering China through the Shanghai. I've kind of change this up to do ETFs instead because a lot of times you can't really trade the index unless you're doing futures. Well, most of you guys aren't doing that. So China's pretty close to a pretty major low here around 40, and let's see how it does there. I mean, we've kind of double bottomed below the 200-day moving average. RSI is not making new lows, which is a really good sign. And I think China is very close to a bottom. And I do think emerging markets are going to make a move to the upside. But what I think is irrelevant. Let's see what price does. We're kind of at support here. And I'm watching China closely as a gauge on what's happening in the overseas markets. Let's look at copper miners as in the COPX. Again, we are back testing this 30.9 level, 30 level on the RSI. We are back testing the price breakout here around 32. And we are now the second attempt, we broke below the 200-day moving average. And that's so common, especially in the summer months. You break below the 200 moving average, you shake out some weekends, and then you rally higher. Is it going to happen here? Well, we'll find out. I will say stochastics are very oversold. When it's happened before, we've had really nice rallies. We saw it here in March. We saw it back here in February, in April, and even in the summer, it's a little bit different. We had a rally, but they weren't significant. I think this rally that's coming next is going to be significant if it comes. If it breaks below 32, guys, there's not much in terms of support here until you go much lower. So If it does break 32 here, I think you're probably moving towards 20, but I don't think it's going to happen. And so I'm a buyer here of copper miners if I were you. Emerging markets, as this in the EEM ETF. So we are oversold. We have not made positive divergence, but it is positive divergence here. We have a lower low in price, well below the 200-day moving average, but price is momentum is not making lower low. Very oversold. So I do expect a rally here. Question is how much this rally goes for. That remains to be seen. But if it cannot and the markets do sell off further, then I think a move towards 44 here is very much in the cards. So emerging markets right now are indeed against the ropes, and that's precisely when I like to buy. I don't think that they're going to break down without a rally first, and then we'll kind of see which direction things go. Financial ETF. So financials breaking, well, they did break out, back tested this base around 35 and back tested this 50 RSI level. Financials are strong. I think I expect them to move back to the upside after this brief consolidation. And what does that mean? I think interest rates are moving higher again, and that means commodities are likely to continue, or not continue, but start reversing to the upside. Microcaps. So microcaps are a key area to watch because if the microcaps are breaking down, then the markets are going to break down. We are back at support 135 here, critical support zone. We tapped the 200-day moving average, right? The last time we had rallies, 200-day, 200-day, 200-day. And so I think, and again, back testing perfectly this area. So I needed to see confirmation above 143, but this descending triangle in an uptrend, I think is going to break out here, especially considering how oversold we are. However, if this breaks below 135 and we do get a flush down, there's not much support. There's a brief level of support at 120, but not much below 100. So microcaps must rally here, and if they don't, then you're going to see a lot more pain ahead in a lot of these names. NASDAQ. So NASDAQ, right now, we've created 4 attempts at a breakout in RSI, could not do it. Found support at the 50 RSI level, good sign. NASDAQ needs to break out here of this trend line or it will reverse lower. So we're watching NASDAQ very, very closely. It's interesting because on the one hand, NASDAQ is obviously an equity, and I do expect equities to continue moving higher from here. But if interest rates move higher, NASDAQ is going to be the weakest, in my opinion, of all the equity ETFs and sectors. So we'll be watching. The NASDAQ has been consolidating and correcting ever since early June in terms of the MACDs, even though the price has been basically stagnant. But I feel like it's likely going to break out here, and we're going to see a major move to the upside once again. This red line here, which is the 50-day moving average, has served as support before, but it's also come down to test the 200 or the 100-day moving average here at 350. So a pullback here, if the markets cannot break out above this downtrend, it could go lower towards 350 here on the Qs. But I think we're starting to move up here, and so that's a good sign for equity bulls. Online retail ETF. Talk about an oversold ETF at support. This is a perfect example. Below the 200-day moving average, back testing, and I think this is going to start a rally led by none other than Amazon. Right? Amazon is a big key to this ETF, and I think it's going to start rallying. Its technicals are starting to shape up, and I'm a strong buyer of Amazon here if I were you. And if this breaks out here, I think you're going to see a major move in online retail ETFs. So this is a great opportunity to get in at a sector that's or segment of the market that's weak. Speaking of Russell 2000, this has been in a range-bound market similar to the microcaps basically since February. It has done absolutely nothing all year, right? And so even while large caps are up 15%. Or something like that. So there's a lot of relative value. Notice we have bounced off this 200-day moving average. We did it last time when we started this major rally. Is it going to happen again? I think so. You got stochastics that are oversold. You've got RSI back testing perfectly. And so far, the rally finally on Friday came at a perfect time, but it needs to break above the 50 RSI level. If it breaks it, then this is confirmation that we're going to break out of this range to the upside. If it can't break it, if it can't break the 220 area resistance of these moving averages, then perhaps it's not going to break out, and we do break lower towards 190 as a possibility, and then likely all the way down to 165. So again, line in the sand here. I think we're very close to a decision point, and I think it's going to the upside, whereas most market participants on my Twitter feed are expecting a downward move, and I don't see it. But what I think is irrelevant. S&P, SPY. So we back tested this level perfectly here at the 50, and so far off the 50-day moving average, we had this hammer here, we had this hammer here, we had it here, 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 etc. 50 has served as a strong support zone. Is it going to be a support zone as well here? We'll find out. It needs to break above 448 to confirm new highs in price, and I'd like to see momentum really break back above the 69.1 level. Otherwise, we create a lower low in momentum and risk breaking lower. If there is a correction that's deeper than the one we saw last week, what's going to likely have to happen is a lower low below 43.50, which is kind of the low of last week, and likely heads to 4,300. At 4,300, there's probably going to be a bounce, but ultimately, I think that we would go all the way down to 4,100 here on a correction. Do I think it's my base case? My base case scenario is we are going higher from here, but if it does go lower, this is the line in the sand, 4,100 on the S&P or 410 on the SPY. All right, so shipping, right? If you are in a bearish market, if you are in an economy that's slowing down, do you expect shipping rates to be going down or up? Well, what's happening here is shipping is breaking out. Shipping is breaking out here. It's broken down the downtrend, and while very few people are talking about it, if shipping's breaking out, then I think that this is the most important chart that we're gonna show here, and I think that the markets are gonna break back higher. A lot of folks are talking about a slowdown. Yeah, it's slowed down from record numbers, but earnings are super high. Demand is growing, not decreasing. And if shipping breaks out here, I think you're going to see a major move to the upside in equities, and most people aren't expecting it. Small cap energy. So small cap energy has very similar to shipping, right? It's got this rounded bottom, and you've got this, this handle over here. Now we've got a bullish flag pattern consolidation here, and the question is this line in the sand around 580. It broke below it. This is the buy zone here between $5 and 580. Do I think we're ready to turn? I don't know, but we're below the 200-day moving average. Very oversold. MACDs are not confirming. RSI, even though we've got a substantially lower low in price, is really not confirming. So we're creating a positive divergence here, and if this double bottom can actually rally back above the 200-day moving average around 624, then I think you're going to get a breakout in energy. So we'll see what happens. But again, the longer it stays below 580, the more likely we get more lower prices. If we break back above 580, then I think we've got a chance for a rally, and that's my base case scenario in energy and small caps. Transportation, I mean, this is as coiled an ETF as you're going to see. You've got the line in the sand support around 245. You've got the 200-day moving average coming in as support as well. You've got two trend lines. One is this upper trend line support, and you've got the downtrend support. And so I think the transportation average is going to move over the next couple of weeks, and we'll see. I mean, this needs to turn. The stochastics need to turn here. I like to see the MACDs turn higher as they're approaching zero as well. If this breaks lower, then you're looking at a move towards that 230 area, but it's very coiled, and I'm very curious to see how this positive divergence resolves itself to the upside or to the downside. Home construction. Home construction continues to be constructive. You've got a rounded bottom that's being set up, and you've got a bullish flag back testing the 50 successfully so far. So home construction breaking out here, if it breaks out above 75 on the ITB, would be very, very bullish. And this is doing so while its overbought conditions have cooled off, and I think it's got the energy necessary to move higher. 10-year U.S. Treasury yield. So this one is one that I'm very closely watching. You've got the rounded bottom, you've got the kind of the handle here, and you've got a higher high situation consistently, and you're above this downtrend. So I think that interest rates are going to break out here, and that is a healthy sign. It might hurt tech a little bit, tech valuations, but so long as they don't break out too much higher, I think a move back towards 175 is definitely in the cards. Look at the perfect rolling higher here potentially at support, and I expect MACDs to do the same. So fixed income, if this breaks out, might get hurt a little bit, but higher rates on the heels of a better economy are quite good. All right, high yield index option adjusted spread. So this one I'm watching closely, because if credit conditions weaken, and they're very, very strong right now, but if credit conditions weaken and this breaks above 350, then you're looking at a move likely to test the 200-day moving average around 370 right now. Last time it happened, it reversed, and we may get a breakout here, although there's negative divergence that's taking place, which is a good sign. Let's see if it breaks out here. That would probably be on the heels of weaker commodity prices. If it rolls over here, then commodities likely break out. All right, guys, I know this is a long video, but I want to cover a lot of things and hopefully giving you a lot to think about. The Pring Inflation Index is just an inflation gauge here on stock charts. It's been hit quite a bit on the daily chart. We're below the 200-day moving average here. So again, inflationary fears have largely dissipated, which is another reason why I don't think the Fed will be tapering as hawkishly as people think. And then this effectively serves as a back test and a potential rally thereafter. Again, back testing this perfect inflection point. And so I think this is a perfect time to be looking at commodities if you don't already own them, because I think they're going to start outperforming the general equities. US dollar. So this is a key chart. I've been looking at this for multiple time frames, and I can see both perspectives, the bullish and the bearish. My hunch is that this is going to reverse here. So on Friday, we had a shooting star here. It's not a significant shooting star. One day doesn't make a trend, but it is back testing this trend line here. And even though we did create a slightly higher high in price, so that's positive divergence, but we are very overbought and we are at resistance. And notice this is the area of resistance here that we had previous breakdowns here and here and here and here. So we are back to that level and testing it from the downside. And I do expect a reversal lower here. Now, again, whether I expect it is irrelevant. There are a lot of great minds that don't think that that's going to be the case. I just don't make, you read some views saying, well, expect an equity bull rally, but they're also expecting a dollar breakout. I don't see how those two work together, because if you get a dollar breakout, emerging markets are going to crash. And I think the Federal Reserve knows this, which is why they won't taper to the extent that the market is currently pricing in. And the dollar will reverse lower, again, feeding commodities to the upside. Could be wrong, very often am, but this is my view, and I'm sticking to it. So at the very least, I see a pullback in the dollar, maybe to the 200-day moving average around 93, and then kind of we'll have to revisit from there. Volatility, well, volatility looked like it was starting to break out, and then it got pushed down once again, and that's a bullish sign for equities. Let's see how deep volatility gets pushed down. Is it going to find support here and break out from here? Possible. Or is it going to roll back over further? My hunch is it's going to do something like this and then like that. So perhaps a pullback early in the week that spikes volatility one more time as an attempt to break the 200-day moving average, and then it rolls over. A couple ratio charts: consumer discretionary against consumer staples. I think consumer discretionary here is bottoming. We're not making a new low, and this is an area of support. And I think it's going to rally here. It just needs to break this downtrend, and that would be a positive sign. You see the stochastic starting to move to the upside. So I'm watching consumer discretionary next week, and I think you should too. Microcaps against the S&P. Well, in a bullish economy, in a bullish market, you want the microcaps, higher risk names to outperform. They haven't been outperforming basically since February. And I think we're bottoming here. I think we're very close to a bottom here. In fact, this is the line in the sand, so it's possible we make one more low here. But notice RSI is not creating new lows here. That's a very, very positive sign. MACDs are doing the same thing. Stochastics are very oversold. So I expect a rally in microcaps here if my view on the market does play out. So there's some really interesting opportunities. The Russell 2000, the small caps against the S&P, they are back to the neckline here. So this is a critical area, and it's just perfectly timed here. And again, inflection point at the 30.9 level and rallied on Friday. It was a critical juncture for it to rally. Finally starting to potentially outperform. It needs to break this 20-day moving average that's sloping lower. I want to see a couple more days where the small caps outperform the large caps. Even if the markets are pulling back, I want to see the small caps outperform the large caps. If it happens here and we break higher, at least to test this upper boundary, I think we'll get a reverse, a brief rally in the markets, and then we'll see what happens. Is this going to be this 200-day moving average, which is now downward sloping? Is it going to be too heavy of a burden to break out of? Maybe, but this to me is a bullish cup and handle, and it's reversing just precisely where you want it to. Here's small cap energy against crude oil. Again, bullish flag here, kind of bullish wedge, right at support. And this is kind of the round bottom. This is kind of the handle. And if it breaks higher here and it's doing so at inflection support, would be a very, very positive sign. I'm seeing signs of a bottom. It needs confirmation. All right, let's take a look at the cryptos and we'll call it a weekend. We've got around a bottom here around 29,000. I was saying for a while here we had negative divergence. We broke down. Then here at 28,000, we were creating positive divergence, and I said a breakout was increasingly likely. And sure enough, we broke out, and now we've got a ton of moving averages coming in as support. I think a consolidation here under 50,000, between 40 and 50,000 would be very healthy, kind of a cup and handle. And then a breakout higher. But right now, momentum is slightly diverging negatively, so we'll see which direction it goes in the near term. Dogecoin. So Dogecoin is creating a inverse head and shoulders right now, or rather head and shoulders. Would not be buying Dogecoin. I think it's going to go lower. I don't like what I'm seeing here on Dogecoin. Ethereum. So Ethereum is creating pretty substantially negative divergence, which tells me unless it can break higher like this, that Ethereum is probably going to lead this pullback down, perhaps towards 2,400. But ultimately, if it breaks above 3,200, I think Ethereum is going to retest those highs at 4,400. But right now, I think Ethereum's kind of setting up for a brief pullback at a minimum. Okay, two more here, Litecoin, or three more, Litecoin. It's got a very, very nice bullish round of bottom. If it breaks above 190, I think this can make a strong move towards 420 again. So keep an eye on Litecoin here. Polkadot. We were covering Polkadot all the way down here. And finally, when this downtrend broke, up we went. And it's been quite a move. And if it can break above 27, I think it's going to 50 and possibly higher than that. But on the other hand, if this ascending triangle breaks lower, then you might see a correction for a couple of weeks to the downside. Ripple. Back in 2020 in December, we said this would be the best performing of the quote major, more well-known cryptos. Well, it's done pretty darn well. And I think right now it broke out of its rounded bottom. It might consolidate here between $1 and 140. But I think it eventually does break out. I do see that there's some negative divergences taking place. So perhaps a cool off here again would do it well, and then breaks out to $2 and then potentially to $4 later on. So that's it for me, guys. Listen, if you appreciate these views, check us out on Patreon and put something in a tip jar. If you like these macro reviews, then there's a la carte. I think it's $11 a month, and we do these just about every weekend. There's also the uranium sector reviews that are $25 a month. Precious metals as well. We try to cover one of those every week. And if you just appreciate the work we do and you want us to continue making these free previews, then do a $5 a month contribution, because obviously the time commitment here is a big one. And well, I appreciate any support that you guys give. And so have a great week, and let's see what happens next week. Very closely watching what takes place. Take care.